Yeah, and I actually have an interesting chart that I want to pull up too, and that's how we, at least the rhetoric is, wow, the market is doing great, companies are doing great, the market is all at all-time highs. And then I came across this chart here, which is basically the ratio of the S&P 500 tech sector versus the S&P 500, and
Yeah.
it's looking like the dot-com boom,
Yep.
where a few names are leading the charge. And so
Yep.
that's where maybe this confidence, this data is like more down to earth, because that's the majority of what humans are
Yep.
experiencing, while this top line data is Nvidia, right? Nvidia's got to account for like 8% of the total gains so far.
You
um
you're so right. It's like that's been like some of the biggest discussion points this week is that, there's only a couple of high flying companies that are pulling up the markets.
And I like these charts. I have another one, because it brings us back to these times where we did have like a big shift, right? Like the dot com bubble was a big, I don't know, year, right, of either highs and lows. And then the other one that I came across in terms of a chart was referencing 2008 and the housing industry, right, where there's now the highest amount of homes available for sale since back in 2008. And so if any industry needs a rate cut, I think the real estate industry could certainly benefit from it. But it's this, we have data, it's the headline numbers sound good, but when we start to dig into it, it is flat. Like we are flat, other
Mhm.
than, I don't know, other than the S&P and some of these high or broad indexes really hitting up there.